is Ashley with Keller Williams coming at you with another video. What did I want to talk to you about today? So just something that's interesting that's kind of crossed my radar. I mean, it's just been kind of going and swirling about a whole bunch is what the heck is the new tax law going to do? Okay, so for those of you who are thinking about buying or selling a house, I mean, it's got to be on your mind, especially if you're thinking about selling, maybe not so much if you're thinking about buying. So hopefully this will be news to you. Okay, so one of the biggest problems right now is that there's still some confusion around the proposed legislation and the legislation that actually got passed into law. Okay, so I mean, I think it's clear why that happens. What you have is you have like the media coming in and they're like getting like every last little itty bitty second of news and kind of stacking it in, and then people have like old information and they just whatever. Okay, so hopefully we can just kind of clear all this up. And also I will post a link to an article here with this video. Go ahead and click it. It's a great article. It'll give you more information and help you out. Okay, so the one of the things that they were going to change was around the capital gains exemption that you get. Okay, and so what they were going to do is they were going to change the time period in which you had to reside in your primary residence to take advantage of this exemption. So the original law, which still stands, was 2 out of the last 5 years. Okay, 2 out of the last 5 years. The proposed legislation, they want to change it to 5 out of the last 8 years. Okay, but that did not happen. So that remains unchanged. It's still 2 out of the last 5 years. You still get to be exempt from capital gains. If you're a single person, I believe it's up to $250,000. If you're married, it's $500,000. Okay, so you have an exemption there. It's still intact, and it's 2 out of the last 5 years. Okay, the next thing was the state and local tax deduction. Okay, now this is not going to be as much of an issue for us here in Washington State, and it has to just do with our state and local taxes are just not as high. Okay, so the bigger states that are going to be impacted are like California, Florida, New York, and so what could that mean for us? Okay, I mean, let's just kind of take it out there and sort of say, okay, like if somebody was really concerned about that and they lived in California, maybe they would move here. Okay, I mean, that's possible. But I mean, if you have to work in California, you have to be there, then maybe you don't have that option. Okay, so I mean, that's one thing, but more than likely, no impact. Okay, the last piece has to do with the mortgage interest deduction. Okay, the mortgage interest deduction. So everybody was really worried, like, oh geez, we're gonna lose mortgage interest deduction and everybody's gonna be all upset. So okay, let's just sort of set the record straight here. First of all, in the old code, there was a limit. The limit was $1 million. Okay, in the old code, there was already a limit of $1 million that you could use the deduction for your mortgage interest. Okay, so what ended up happening is what they proposed was going to $500,000. Okay, so everybody was really worried that it went down to $500,000. Okay, but it did not. Okay, what ended up happening is the Senate and Congress, they ended up meeting in the middle, and they ended up at $750,000. So what does that mean? That means that if you own multiple properties, you can still do a deduction of the mortgage interest up to $750,000. So if you have like 2 houses or whatever, it's still good. I mean, there was talk about getting rid of that, so it was only to your primary residence, but you can still do multiple houses as it stands. Okay, so who is this really affecting? Okay, this mortgage interest deduction issue. It's going to clearly affect people who are planning to purchase houses kind of in that like $900,000 to $1.2 million range. Okay, and really for the majority of the people, at least in the Everett marketplace, you're gonna remain unaffected. And I don't want to speak for people that buy $1.2 million homes, but probably if you're buying something that high, I mean, you weren't getting the deduction anyway to begin with, right? Because at the $1 million, you'd be over probably. First of all, and second of all, I mean, you're probably buying a home for a different reason, and you're just sort of looking at it from a different perspective. Okay, so really when I sort of look at like all the pieces here, I mean, pretty much not much has changed. I mean, for the majority of people, for like the everyday person, you still get the exemption 2 out of the 5 years. Salt's probably not going to do anything to you, and As long as your mortgage, the mortgage interest that you want to deduct on is not exceeding a mortgage of $750,000, you're good. So if you're buying a house and you're just trying to get something for like $310 or I don't know $225, you get all the pieces. It's awesome. Okay. So I'll quickly disclaim this at the end here. You know, definitely do not use this as your sole piece of information. Make sure that you are consulting your CPA when you're doing your financial and tax planning, or your tax accountant, and make sure that you're actually in range and adhering to all of these rules. I mean, there's a lot of them. Okay, it's tax code. Okay. Other than that, like the video. Please subscribe to my channel. Follow me on Facebook and hit my website, ashleybolden.com. And I'll see you again soon, YouTube.